joining American Muslim Community Foundation today. And we will go ahead and start sharing our screen with you to kick things off. And I wanted to welcome our panelists as well. So you guys should now be seeing our screen. And today we have with us Owais Dadaboy and Amina Saeed. So Owais, why don't you go ahead and introduce yourself?
Sure. Assalamu alaikum, everyone. I want to wish you an early Ramadan Mubarak. It's almost here, and that's why we're having this presentation today. It's my pleasure to join this call and to be with all of you. As he mentioned, my name is Owais Dadaboy, and I'm with Saturna Capital, which is home to the Amana Mutual Funds. And I'm the Director of Islamic Investing there. I'm also, if some of you are from Southern California, the Chairman of the Shura Council of Southern California, so you might know me from there. And also involved in a Zakat organization called Uplift Charity, which is also in Southern California.
Wonderful, thank you, Owais. And so my name is Muhi Khwaja. I am the co-founder of the American Muslim Community Foundation. And I started American Muslim Community Foundation in 2016. My background before that, I was with American Red Cross, Tatleef Collective, Institute for Social Policy and Understanding, and have been in this fundraising and development space and nonprofit leadership space over the last 10 years. So really glad to be here with you guys and share a little bit more on what AMCF does. Amina?
Hey, Salam alaikum, everybody. It's exciting to be here with you today in early Ramadan Mubarak from Chicago. My name is Amina Saeed, and I'm the president of the River Valley Law Firm. We are a boutique law firm located in West Suburban Chicago, Illinois. And our practice area is focused on estate planning, the related fields of asset protection planning, charitable planning, special needs, guardianship, probate, and trust administration. These are the things that we work on exclusively. And many of our clients are Muslim, whose needs include making sure that their plans are in keeping with Islamic inheritance rules. And we, of course, help them with that as well. I'm on the board of the Muslim Bar Association of Chicago, founding member of that organization, and have also been involved for the last couple of years in a new initiative here in the Chicago area, a Muslim Planned Giving Council that we're establishing to help nonprofit organizations understand the importance of having planned giving programs and making sure that we can get as many Muslim institutions to incorporate planned giving as part of their regular fundraising initiatives. So I'm excited to be here today.
That's really amazing. And I'm so thankful that we're finally, as a community, getting to that space. So more on that later, inshallah. You know, we're here because we understand that Zakat is a pillar of our faith. And we understand that Sadaqah and Zakat are mentioned dozens, if not more than 100 times in the Quran. And oftentimes it's paired with prayer. So we know the significance of charitable giving. And, you know, with that being said, we just wanted to start off with that mindset of why we do and give Zakat. And with that, I'll give the next 15 to 20 minutes to Owais. Take it away, Owais.
Great, thank you very much. I'm going to start sharing my screen here. All right, let's get all the buttons pushed. Okay, Bismillahirrahmanirrahim, Alhamdulillah Rabbil Alameen, Wassalatu wassalam ala Rasulillah.
So we see your presentation notes, just FYI. There you go. Thank you.
How about now?
Yep,
Okay,
we're good.
Perfect. So the title is The Institution of Zakat. I'm going to take you through a few slides here. We'll give you some real life examples as well. sometimes when we talk about zakat, we don't get into the details of, how to calculate it. So we're going to do that today. Now, as you know, there's many calculators out there as well. So I would ask you to refer to those and find one that takes into account everything that you have going on in your financial life. So since we already mentioned that I'm from Saturna Capital, which is home to the Amana Mutual Funds, anytime we mention Amana Mutual Funds, we'll tell you to please consider an investment's objectives, risk, charges, and expenses carefully before investing. And to take a look at our prospectus as well, you can go to amanafunds.com or call the number that you see on your screen. We'll do a quick introduction of the presentation. We'll talk about zakat and nisab, and then we'll, as I mentioned, calculate some zakat for you and where are some options that you can spend your money. So Saturna Capital, hopefully you've heard of us. We've been around since 1986. Amana Funds have been around since 1986. And over the course of time, those Sharia compliant or Islamically based mutual funds have had, different methods of strictures on how you can conduct and keep a portfolio. So for example, how do you make sure that something is Islamically principled? You want to take out banks and insurance companies and tobacco and alcohol and gambling and so forth, and have low risk companies and companies that have low debt. So the current structure was given to us through a fatwa in 2004 that we worked with the Fiqh Council of North America. And we have an outside auditing organization that we send our portfolios to every 3 months, and that is called Amani Advisors, and they are based in Malaysia. Now, if you look at Surah Al-Imran, verse number 180, let not those who withhold and hoard God's provision think that this is good for them. It is bad for them, for they will carry their hoarding around their necks on the day of resurrection. God, Allah, is the ultimate inheritor of the heavens and the earth, and Allah is fully cognizant of everything you do. In Surah Tawbah, verse number 103, take from their money a charity to purify them and sanctify them and encourage them, for your encouragement reassures them. Allah is the hearer and omniscient. So what is zakat and why is it so important? It's one of the five pillars of Islam, as all of you on this call, I'm sure, understand and know. But when we're giving our zakat, it's actually a means of purification of our money. So when we're giving zakat, we shouldn't think of it as a tax. We should think of it as something that is going to increase the barakah of our money, that is going to make our money better for us. So, that's the way we should look at it. It's not a tax like the American government taxes us. This is a very different way to look at things. Not everyone has to pay zakat, only those that are considered wealthy, and we'll go into that when I talk about Nisab in a future slide here. Whenever we're giving zakat, it's just like any other deed that we do. We should have intention for it. So before you start your prayer, your 5 daily prayers, or any prayer, you're going to have intention. Before you even make the adhan, you have to make intention and say Bismillahir Rahmanir Rahim. Same thing with zakat. Now, if you're giving zakat and you're going to your local masjid when the masjids are reopened, if you find their donation box and you say, well, I've got this cash, it's zakat, my intention is zakat, and you drop it into any box, that also doesn't work. So the intention has to be there, and then we have to carry out the act correctly as well. You have to put the money into the zakat box. If you're writing a check to any organization, make sure you write in the memo section zakat so they can use it in the right place. This is different than sadaqah because zakat has very specific rules of how it must be used. Sadaqah has, there's more openness to that. You can use it in many different places. And sadaqah or general funds. So, for example, if you wanted to help your local masjid get through this turmoil and they need to make their monthly, payroll and whatnot, you wouldn't pay them zakat. You would pay them just a regular charity. If you wanted to help a local food pantry that's helping people of every religion, you would give sadaqah, not zakat. So we'll talk about where zakat can be used at the end. We have had people, interestingly enough, mention to us, and I'm sure if there's any community leaders, you get this question sometimes. We already pay taxes, and taxes that we pay go to people in need through food stamps, through government assistance, through other means. This is very different than zakat still. So that cannot be used in the place of zakat. We can't say that we paid $30,000 in taxes this year, so we're exempt from paying zakat. What is the nisab? This is the calculation to figure out whether you have to pay zakat this year. So Mahmoud Abu Saud says that amount which is sufficient to sustain the minimum average family for 1 year. In modern days, what we look at is the rulings from the past, which says that you have to have 87.48 grams of gold or 612 grams of silver. So if we just focus on the gold, that's 3.08 ounces. So what does that equate to? The spot price of gold today is roughly $1,700. So if you have around $5,200 of any kind of wealth, right? So that would be money in your education savings account, in your 401k, in your checking account or savings account, in your, under your mattress, as they say. Hopefully no one's doing that. In your purse, all of the money combined, whatever you have, is all going to be combined. If you have that much, then you do owe zakat. And we have to get very specific on how we calculate zakat and how we distribute it and how we keep track of it. So what I've done for many years, after hearing some of the local scholars many, many years ago, is to keep a spreadsheet. Keep a spreadsheet of every zakat dollar that goes out. And this can help you not only to calculate and make sure that you pay enough zakat in the year that you need to pay it, it can also help you when you're running your taxes. So when you're running your taxes, you can take a deduction for anything that you've paid to a 501c3. At Saturna, there's two different calculations, right? So the one that we run is the one that is much more difficult for you to calculate, which is the 10% or 10.3%. I'll explain what the difference is there. So the majority opinion and the one that most people know about is to pay 2.5% every lunar year on anything that they own. That could be 401k money, IRA money, your checking account, savings account, gold and silver, etc. So there's another opinion, and this is one that is followed by some people as well, which says that you can calculate it a little bit differently on productive money. So if you have a stock portfolio, if you have some investment property, etc., that's using your money somewhere versus a gold bar or money sitting in a checking account. So that ruling says that if you're using the lunar year, you would and apply a 10% rule on that. And I'll explain how we actually calculate that. But having said that, you can still use your 2.5% number. But again, at Saturna, we help you with, if you're using the 10% number, we help you to calculate it because you would not be able to do it yourself. The static number, which I mentioned, is 2.5%. And you're seeing here that it's 2.57. What is the difference? If you're using lunar year to lunar year calculation, and you have $100,000 in a checking account, you're going to pay 2.5%. But if you're going from January 1st until the end of the year, then you're going to have to increase that number to make up for the days that you did not consider, because the calendar year, American calendar year, is longer than the lunar year. So that's why you would multiply it times 2.57%. So write down your questions since you're at home or maybe doing some work as well during this time. You have a chance to write down your questions. We'll take them at the end, and you might have questions about that. Prophet ﷺ said, on a land irrigated by rainwater or by natural water channels, or if land is wet due to a nearby water channel, ushr is compulsory. So scholars have from that derived that productive money, again, put money into an investment. You could have purchased 50% of a halal restaurant, for example, or you put money into a mutual fund that owns stocks within it, then you would use this 10% number versus the 2.5% number if you want to go with that. And you can see all of the different various pieces that you would calculate that number on. So for stocks, if you're using the calendar year, 10.3% for 1 year. And if there is loss in that year, then no zakat is due. This is very different than using the 2.5% rule, where you're going to pay zakat regardless at the end of that year. So we calculate it based on the calendar year. If people come to us during Ramadan, we can't calculate it during that time because we have to look at the numbers for the whole year, and we'll go on and we'll tell you how that is calculated. So if you use your year-end value, right? So the money that you had at the end of the year. I'm going to do a quick, some quick numbers for you here. Let's say you had $120,000 at the end of 2018, all right? And you put in some more money, you added $20,000 into your 401k. So 120,000 is sitting in your 401k, you add $20,000 to it, but you had 10,000 disbursed to you. Your year-end value will be 110,000. So at the beginning, so we're taking that $110,000 year-end value and subtracting the beginning value. So it's 110,000 minus 100,000 will get you to a $10,000 gain, because the new investments and the disbursements need to be figured into this. So you have a $10,000 gain, and you're going to multiply that times 10.3%, and that would get you to $1,030 paid in zakat. And so that's how the calculation is done. If you are a direct shareholder of ours, then we can make that calculation for you if you sign up for that. We'd be happy to do that. We have a case study. Actually, Monem, I believe, is on the call as well today. He created this case study, and he says, look, let me take a look at, maybe not all of the numbers are exactly his, but, we're going to take this where we say he has gold, silver, other jewelry. He has checking and savings accounts. He has a house through an Islamic financing. He's got a couple of cars, furniture at home, clothes, and mutual fund portfolio of IRA and education savings accounts. So the way that we would do this is he doesn't have any bars of gold or coins of gold, but he has jewelry in a safe deposit box, and it's 10 ounces. So we're going to multiply that value of whatever that jewelry is times the number that he has here, which is $300 per ounce, which is $3,000. So on that, if you're using the calendar year, you're multiplying 3,000 times 2.57%, or $77 is due on that. And this is how specific we have to get. For every one of our assets, we have to do this. He had money in a checking account, $3,000 at the end of 2018. And by the time it was 2019, he had $4,000. So how much was with him the whole year was $3,000. So 3,000 times that 2.57% is another $77 due on the checking account. Use the same calculations for the savings account, and he'll have $129 payable for his savings account. Now, no zakat is due on your home through the Islamic finance, or on your cars or the furniture or the clothes, because those are all use assets. Those are things that you're using. You do not have to pay zakat on it. And I'm running through this relatively quickly for the sake of time, but you can take screenshots of anything you'd like or ask questions at the end. In his individual retirement account, he has $5,000 at the end of 2018. He contributed $5,000 more, and at the end of 2019, he had a gain, because last year the market did quite well. So $14,000 is what he has at the end of 2019. But remember, he contributed $5,000, so that's new money. So we have to subtract that out. So the new adjusted year-end value is 9,000. So the year's gain is 9,000 minus the 5,000 is $4,000 of gain. And we're going to multiply this because it's a use item. So if you're going to use that methodology, and we mentioned there's two methodologies. If you use this methodology, you're going to multiply it times the annual calendar year percentage of 10.3%. So on that gain, he will pay $412 of zakat. He also has education savings accounts for his two children. So here he had $4,000 in there. He contributed $2,000 each for both of those kids. That's the maximum you can put into an education savings account. And he had a nice increase, and it became 10,000. So we're going to take 10,000 minus that 4,000 that we added, and now you have 6,000. So initially, when he first started, he had $4,000, but 6,000 is the new value. So $2,000 gain. You multiply that times 10.3%, and you have $206 due in zakat, because this is productive money invested in mutual funds, which are invested in stocks, which is just like owning, the local halal burger restaurant. If you own half of that, it's the same as owning half of a publicly trading company or a percentage of it. So you can see how deliberate you have to get when calculating zakat. So the total that Monem would have to pay at the end of this year is all of these numbers combined, the four different calculations we made, it would be $772. You go ahead and then figure out where you want to pay that, and we'll talk about where you want to pay your zakat. So the services that we would offer at Saturna Capital, again, it's the company that manages the amount of mutual funds. We're going to calculate using the end of year values. We're going to send you a letter with the calculations and the amounts that you'll have to pay in January. So we run that calculation and we mail it to you if you request that. And people want to figure out what they owe in Ramadan, but again, as I mentioned in the beginning, we are not able to do that. We have to use the calendar year because that's how we can calculate how much you owe on this. So we will also send you a brochure if you want, or you can go to our website and pull that up, amanafunds.com, to learn more about how we calculate this. Some of the or all of the calculations are on there as well. It talks to you about that. And then we do not take out the money from your accounts and pay the zakat for you. That's up to you to do. And we do have an online calculator coming soon, so that way you can do this yourself. Who do you pay zakat to? So there's 7 categories that you're going to pay zakat to, and those are people that are poor. So they're making it, but they just don't have enough to make it every month, right? So somebody that now has to pay $1,700 a month in rent, but they have $1,500 coming in, so you're making up the rent for them. Those that are in need or destitute, those are people that have nothing, right? That could be, let's say, a Muslim that recently became homeless. So that person has nothing. They're not just poor, they're destitute. You would want to help them. If you are a recognized charity, now depending on the scholar you go to, they'll tell you that it has to be a government that says that you're the official zakat administrator. And if you are categorized as one of those, then you can take out a percentage to pay for those people that are going to go collect the money from the rich, quote unquote, and give it to the poor. Those whose hearts are being reconciled, those who are held captive. We don't see that this very often in modern day, but if we did, then we can pay a ransom to let those people out. Those that are in severe debt. So it's not just, I went and got a new Islamic financing, or I got a loan from B of A, and it just seems burdensome to me. I'd like some relief on it. This is for people that are having overwhelming debt that is causing them grief and anxiety, and they're not able to make their payments. Those who are stranded, and this actually happens. We have in Southern California, we'll have people come from New York and Florida. Somebody will tell them there's work in California. They'll come here and then they're stranded. They can't get back. They can't find a job. They don't have a place to live, and they want to get back to their home, but they don't have to have a way to do it. So this is a real life example in the cause of Allah, fi sabilillah. And it's better to give to non-dependent family. So for example, if your parents are not doing well, you can't give them zakat. So what you would do is you would give them just of your regular money. They deserve that just like yourself and your children would deserve that. But if you do have family that is in need, maybe another country, maybe over here, they are good you should be giving it to them, and then you should find other people that need zakat as well. So these are our final thoughts on zakat. Can you put money into an endowment and then pay that off later? So let's say you have to pay $10,000 in zakat this year. You put it into an endowment, and that money is not going to be used for any of those categories. Well, the money needs to be paid right away. People are in need every day, so the money shouldn't be sitting somewhere. It should be paid and used. That's the idea. Let's see, can pay at once or over 12 months. Now, being part of a few different charities here locally, I can tell you that we want to smooth out the revenue of what organizations receive in zakat, because people are coming to us not just in Ramadan for assistance, they're coming to us year round. So if you know that last year you paid $10,000 in zakat, schedule a monthly contribution to a few different organizations or into the American Muslim Community Foundation, and put in $500 a month or $1,000 a month or whatever happens to be. And then if you owe more money at the end of it, you can write an additional check. This makes it easier for you to pay it. It makes it easier for the organizations to receive it. And it's the same thing as what Aisha radiallahu ta'ala anha mentioned, which is small deeds done on a regular basis are better than those that are done infrequently. But I'm not saying that giving at other times is as great as giving in Ramadan, because obviously in Ramadan there is extra reward for that. But in some cases, it might be very difficult for you to give all 10,000 at one time. So it's better to try to do it so you can make sure to pay your zakat. It's that important. Now, people will come to us and tell us, well, I have money in a 401k or an IRA or an education savings account. I can't pull money out of there to pay my zakat. Well, you could, but you don't want to, and that's probably a good thing not to, because you're going to pay tax and penalty on the withdrawal. So instead, what you can do is use your own checking or savings account to pay it. You calculate it on the IRA and the education savings account, 401k, but you pay it out of your checking and savings account. So with that, I'll turn it back over to Muhi, and we'll take questions at the end. Looking forward to that. Thank you very much.
Thank you so much, Awais. Very informative, really tough to do in only 15 to 20 minutes. So definitely lean on Awais as somebody who you can rely on in the future, and we'll do Q&A at the end as well. I want to pass it on to Amina, who is up next. Wonderful. Looks great. Thank you so much, Amina. And just need your mute off. Let's see.
Okay, sorry about that, everybody. I forgot to take myself off of mute there. Okay, let's try this again. Okay, so Assalamu alaikum again. It's nice to be here, and I'm going to just jump right in because we don't have that much time. I'm going to be talking to you about charitable planning as it relates to estate planning and how those two factors impact what you do with giving to your favorite charities. Now, Warren Buffett once said, "Someone is sitting in the shade today because someone planted a seed a long time ago." And that's really what charitable planning is about in a big, to a large degree, planting the trees that will provide the shade for our loved ones, be it family members, friends, and our community institutions for a long time to come, while we are around and after we're gone as well. Charitable planning goes hand in hand with estate planning. And estate planning is about taking care of everyone you love and taking care of everything that you own. That's what estate planning is about. It's as simple as that. People tend to think that it's some really big concept that only applies to the wealthy, but it's a very simple process. It's just make sure you have a plan in place to take care of everyone you love and everything that you own. For a Muslim, that can also include making sure you take care of your community and making sure that you have a plan in place for Sadaqah Jariyah. There are different ways that you can do estate planning and charitable planning. If you happen to have a will or a trust in place, then you have an estate plan that you have put together. Or if you have beneficiary designations on your IRAs or 401ks or a brokerage account, life insurance policies, then that's also part of your estate plan. For people who don't have a will or a trust in place, they still have a proper estate plan. It may not be the plan that they want, but they happen to have an estate plan. It's the plan that their state has in place for them. It's called the law of intestacy, and that's what applies when you pass away without having designated yourself who will receive your assets at the time that you pass away. Of course, it's best to have an estate plan that you have put together yourself. And this is especially important for Muslims because those who want to make sure their assets are distributed at death in accordance with Sharia must have that specified in writing in a way that is in keeping with their state's estate planning laws. So you can't just write it on a sheet of paper and say, okay, I did it, I took care of it. It has to be done properly in a will or in a trust. You have to specify exactly how assets have to be distributed. You have to know how the Islamic inheritance rules work and what you can and can't do. Everything must be done properly. In Illinois, for example, where I practice, a will has to be witnessed, it has to be notarized, and it must meet certain other requirements. Different states have different requirements. It's important that your plan be in keeping with your state's requirements. Otherwise, what's going to happen is at the time you pass away, your plan will not be what will take place at your death. Instead, your assets will be distributed in accordance with your state's law of intestacy. And that, I assure you, will not be in keeping with the Islamic laws of inheritance or will making. So it's important to make sure that you have an estate plan in place that is in keeping with your wishes, is in keeping with Islamic rules of inheritance and will making, and make sure that it is in keeping with your state's rules as well. Now, unfortunately, many times, even though people have some aspect of an estate plan and a charitable plan in place through a will, through beneficiary designations, or through a trust, they tend to make mistakes, and those can be really costly at the time of death. Ultimately, those mistakes will have a costly financial impact on your family because your family is going to end up getting less of an inheritance. More will end up going to the government. Also, it has a costly impact on your community because money that you would have possibly otherwise left to charity, to your favorite nonprofit organization, is going to be lost. It's not going to end up going to that nonprofit. So it's important to make sure that you don't make these mistakes in your estate planning. First, making sure that you have a proper plan in place that avoids probate. Probate is the process of going through court when a person, two stages. First, when a person gets sick, and secondly, when a person passes away. First, we're going to talk about the process of what happens when someone gets sick. This is extremely important right now because this is an issue that people are facing who find themselves getting sick due to COVID-19. We're seeing this as being the biggest issue right now. People not having a plan in place in case that they get sick. And what that can mean is that they have not designated who will make healthcare decisions for them in the event they get sick. And they haven't designated who will make financial decisions for them in the event they get sick. So whether you are the healthcare provider or you're the patient, it's important that you have a plan in place because this, obviously it affects patients, but if you're a healthcare provider, if you're someone who's on the front lines, it's extremely important that you have a plan ready to go just in case something happens to you. If you have not designated who can make healthcare decisions for you, and if you have not designated who can make financial decisions for you, those decisions may be made by state law or they may be made by a judge, both of which will not be in keeping with Islamic law and they will not be in keeping with your wishes. Additionally, right now, because of the COVID-19 situation, in most jurisdictions across the country, most states, courts are shut down. And that means that unless there is an absolute emergency, a judge is not even going to hear the case, which means that there could be more delays in how your affairs are taken care of if you don't have a healthcare power of attorney and a financial power of attorney in place. Another thing is also if you have minor children, children under the age of 18, that is, it's extremely important to have short-term guardianship documents in place so that if you're a single parent and you end up in the hospital, or if you and your spouse both end up in the hospital, you have designated and given authorization to someone to take care of your children if it ever is needed. So currently, because of COVID-19, living probate is extremely important for everyone to address, to make sure you have the right documents in place. And this is a huge mistake. People don't address this, don't have this taken care of, and then they're finding themselves in the hospital. We're seeing cases like this come up. Our office has received several calls already. So we want to warn people to be prepared. Another issue is what happens at the time of death. If you don't have a plan in place, then a proper plan in place, you may end up going through the probate court process. Now, people think that if I have a will, I'm good, I've done my part. And that's not necessarily the case. In most states across the United States, a will does not necessarily avoid the probate court process. The probate court process is where someone has to file a petition in court and have a judge review your affairs and review who can be the beneficiaries and how much they will get, sign off on all that before beneficiaries can receive any assets, and it requires an filing of an asset inventory of your assets to be filed with court before any approvals. So all this can be very expensive, court fees, attorney's fees. It's time consuming. On average, probate takes typically about 2 years if it's a simple case, sometimes a lot longer. It becomes a public proceeding because your assets have to be filed in court. Anyone can go down to the courthouse and review your court file, find out what you owned, who you left it to. There is no privacy, especially for Muslims who want to leave their assets in accordance with Islamic law. If they don't want to have any court involvement in their affairs, it's extremely important to make sure that you have set up an estate plan that avoids the probate court process. The best way to do that is to have a revocable trust, sometimes known as a living trust. That allows you to identify who will receive your assets at the time you pass away, just like a will does, but it goes much further than a will. It also allows you to identify who can take care of your affairs if you become too sick to take care of your affairs. And it can specify that you want things to progress smoothly, provide certain protections. Of course, there's complete privacy, so no one will find out, other than the people you designate, exactly what the plan says. And there'll be no court review, no court oversight. So it's important to understand the distinction between a will and a trust and determine what is best in your case so you can avoid this #1 planning mistake and not go through the probate court process, whether you become sick or at death. Now, another big mistake people make is they don't plan for estate taxes. This is not something that affects too many people at the federal level these days because the estate tax exclusion amount is $11.5 million. That means that at the time you pass away, if you have assets over $11.5 million, then you are going to pay an estate tax to the IRS on the amount over $11.5 million. So unfortunately, it's not a problem for most people. But if you do have a taxable estate, if you do have assets over $11.5 million, and by the way, that calculation of how you get to that number includes everything you own, including the value of retirement accounts, IRAs, 401ks, including the face value of life insurance policies. Many times people don't understand that. So when you add everything together, your full net worth, if it's over $11.5 million, then you need to do some tax planning to make sure that you will not have to pay estate taxes. The estate tax rate, the federal estate tax rate is 40%, meaning that if you have assets over $11.5 million at the federal level, and if you haven't done proper planning, you're going to pay 40% of the amount over $11.5 million at death. And that's money that could have gone to your family or could have gone to charity. Now, the other thing you need to be aware of is your state estate tax. In Illinois, our state estate tax is far less than the federal $11.5 million exclusion. Our state estate tax is $4 million. So in Illinois, if you have more than $4 million, even if you don't owe a tax to the federal government, you may still owe taxes to the Illinois Department of Revenue if on anything over $4 million. So if you're an Illinois resident, you may not have to do planning for the federal exemption, but you have to do planning for state of Illinois. Similarly, many other states have their own state estate tax. It's important for you to understand that. It's important for you to consult with someone, with a estate planning attorney in your state who can advise you about the estate tax exemption amount in your state, so you can prepare for that, plan accordingly, so that you don't end up paying taxes unnecessarily, and that money can go to benefit your family or charitable organizations that you would like to benefit at death. Another planning mistake people have is they often don't plan for asset protection. I see this often amongst my physician clients. They come to see me when it's too late, when they already have a malpractice lawsuit against them. At that point, there's little that I can do to help them for asset protection planning. If that's something that should be done when you do your estate planning, there are strategies to be used that can help you protect your assets in the event that you get sued for malpractice. Or if you're not in a high-risk profession, you can protect your assets in the event that you're driving and you get into a car accident and someone decides to sue you. You need to make sure you protect against that. You also need to make sure you've protected yourself against long-term care costs, nursing home costs, hospice, assisted living facilities costs. The Muslim community in America is an aging community. Many of us have no experience in this and have no plans in place for long-term care costs. And these bills can have a long-term severe impact on the family, eat up a lifetime of savings, money that you would have otherwise left to your children or left to charity. Another mistake is not planning properly for the inheritance that you're going to leave for your family, not providing any divorce protection for your children for the inheritance that they're going to receive, or any creditor protection for them, so that in the event they get sued for any reason, the money that you leave them as an inheritance is going to be protected. Again, the more you protect them, the more you're going to enable them to provide for charities that are important to you and are important to them. So it's important to understand the different ways you can provide protection for your beneficiaries and see if any of those are things that you need to provide in your plan. Planning mistake number 5 is not having an estate plan that is Sharia compliant. Many times people walk into my office and present me with a beautiful plan. They say, oh yeah, we had this done by a lawyer who said he understood the Islamic rules of inheritance. And unfortunately, as I'm looking through the plan, I find many areas where the plan is not compliant with Sharia. It is extremely important to have a plan. If this is important to you, you need to go to an estate planning attorney who understands Islamic law of inheritance and will making, who can make sure that your plan is properly compliant. And yes, it is possible, absolutely, to have a plan that is compliant with Sharia as well as with state law and federal law. Just has to be crafted properly. We do it all the time. Last planning mistake is not having a plan that has a means of passing on things that are not financial in nature. So for example, the years of wisdom you have collected through your education, through your work experience, do you have a plan in place to pass that on to benefit the next generation? What about your years of community service, political involvement, spiritual involvement, involvement in your faith community? Is there a way to pass that on, the lessons that you have learned, to the next generation in your community, passing on leadership? Many times people plan for passing on the financial aspects of their estate, but they overlook their legacy in other ways. For Muslims, this is important because a huge component of our faith is about giving zakat and sadaqah jariyah and making sure that you have done your part to leave a legacy when you pass on. So passing on what you have learned, passing on a way to keep the next generation engaged in our faith tradition. It's extremely important to do that. There are several ways you can do this, and I'm just going to talk about a few right now. You can establish charitable trusts that provide for means to give to your favorite nonprofits during your lifetime and after you're gone in a way that is tax advantageous to your family and to the charity. You can establish a private foundation that your children can be involved in with you. You can have a donor advised fund, which Muhi is going to talk about in a minute. Muhi will tell you about the donor advised funds that the American Muslim Community Foundation has. This is the most popular form of charitable planning in America right now, donor advised funds, and for various different reasons that he'll talk about. But that's one way to do charitable planning. Another is as simple as just having a bequest in your will, or having part of your IRA or 401k, having a charitable organization as one or the beneficiary of those. You can have your kids, and you can have a charitable organization as like a 10% or a 5% or even a 50% beneficiary of an IRA or 401k. And there are tax benefits to you and to your family if you do that. Also, as an aside note, you should know that if you give your required minimum distribution directly to charity, it doesn't have to be reported on your taxes. So there's a few ways you can do charitable planning. One thing I will note, the CARES Act, which was just passed to help provide relief with COVID-19. There's a provision in there that says you can give a $300 donation to charity in 2020, and you can deduct that on your tax return next year, even if you don't do itemized deductions. So something small to be aware of, but it's important. So with that, my message to you today that I've tried to convey is that you need to have a plan in place if you want to maximize charitable giving in your lifetime and after you pass away, and make sure you've done all you can to have sadaqah jariyah plan in place and leave a legacy. Then you need to have a comprehensive plan incorporating estate planning and charitable planning that has all aspects covered, so that you can make sure that your community and your family will be protected long after you are gone. With that, I'm going to hand it back to Muhi.
Amina, this was so amazing. I'm always inspired by learning more about estate planning, and it's a great refresher. So thank you so much for breaking it down and making it digestible, because it's often a concept that not a lot of people grasp right away, and the way you did it was very informative. Thank you.
My pleasure.
Great. So now we are going to get into the last segment, and I'm going to do my best to keep mine to 15 minutes as well, to give about 20 minutes to everyone to ask questions. So why don't we start off with, just thank you again so much for being here. And we are the American Muslim Community Foundation. We've been around since 2016. And I like starting out with a poem done by Sheikh Ahmadou Bamba, who is a sheikh from Senegal. And he has a poem that's called the Masalik al-Jinan, the Pathways of Paradise. And in it, he talks about how everyone who passes away has a desire for returning to this world, because they want to just do one more good deed. And as they're trying to pass the sirat to paradise, the bridge to paradise, they are being distracted by the things that they could have done or didn't do as well. So the way to avoid that scenario, Sheikh Ahmadou Bamba talks about giving charity. and how that is a means for people to be steadfast on that bridge and enter into paradise. So the reasons he says that giving charity is an affirmation of trust in our faith, that it purifies our wealth, protects us from calamity, expiates our sins, and brings joy to those who actually receive the gift from us. And I would even go to say that it brings us joy in giving it to other people as well. So with that being said, we'll get into what a community foundation is and why we started the American Muslim Community Foundation. So a community foundation, in the bare bones, is a publicly supported nonprofit organization or institution that's governed by a board which serves its donors, the nonprofit sector, and the community overall. We started in 2016 because of the hundreds of community foundations across the country, none of them were operated by Muslims or for the Muslim community overall. So that's why we started AMCF. Our vision is to lead sustainable and strategic Muslim philanthropy for today and future generations. Our mission is to cultivate donor giving and diversifying funding to advance charitable causes. So if you think of it, we have this donor ecosystem and nonprofit ecosystem that work together, and AMCF is in between to make it happen all together in one synergistic model. Our core values are that we focus on our sacred faith, that we are strategic and sustainable. We love collaborating, just like today's webinar. We're diverse in our board, in our mission, in the organizations we support, in the donors who utilize us, that we're inclusive, and that we act with integrity as well. So some of the programs that some of the core services that we offer are donor advised funds, which we'll get into deeply, and giving circles. So giving circles are when a group of family or friends come together and they give their money together in a collected pool of funds and then decide how to distribute it later. For nonprofit organizations, we help them set up endowments so that they can invest and be more sustainable. And then we allow for fiscal sponsorship, which is pretty much us collecting the funds up front and redistributing it to charitable organizations or projects that don't have their 501c3 yet. So it's like they're outsourcing their accounting to us, and that's what fiscal sponsorship is. Some of the programs that we're going to be offering later this year and that we already do, we're launching a podcast in the next month. Later this year, we're going to have a nonprofit accelerator, inshallah. We look to have a professional development fund. We do webinars and consulting just like this. And for nonprofit organizations that have endowments, we help them through their strategy of how to raise it. For later this year, we're also hoping to host the Philanthropy Awards. And inshallah, we are also launching Muslim philanthropic values that will allow you to have conversations with your families about what Islamic values are driving your charitable giving goals. So let's jump into it. What are donor advised funds? A DAF is pretty much a savings account for your charitable giving, and it allows you to give through one vehicle where you will get one tax receipt for all of your charitable giving. So right now, you might be preparing your taxes, you're going to be collecting receipts throughout the year from the previous year, and you have 10 or 20 or even more organization receipts that you need to collect. That can be cumbersome. And by setting up a donor advised fund and doing all of your charitable giving through that one vehicle, you get one consolidated receipt. And you get the flexibility of being able to make the donations to the nonprofit organizations you want to support for the rest of your life. So you get to put in all of those assets up front, whether it's cash or stock or real estate, however you can contribute. And then at the end, when you decide which charities to give to, that is on your own timetable. And again, you can leave beneficiaries for a donor advised fund so that your kids can then make decisions for you after you've passed, or you can say that you want to leave a certain percentage to nonprofit organizations directly. So a donor advised fund pairs really well with trust that Amina was talking about, and it also pairs really well with your IRA. If you are older than 70 and a half, you can use your required minimum distribution and use that money up to $100,000 per year to set up a donor advised fund or to give to charity without taking a penalty on those funds. So again, AMCF provides you a receipt up front for your contribution to your donor advised fund, and then you get to select the nonprofits on your own timetable, and you get to name it after your family as well. So we talked about some of the quick benefits, and you get to set aside the money now, decide where it goes later. You get one tax receipt. Your balance can grow tax-free and be invested should you choose you want to invest it. And you get to rely on AMCF. We are grassroots. We understand the Muslim community. We can partner with you to find causes you want to support. No other donor advised fund on the market today understands the Muslim community the way that we do. You could walk to Fidelity, you could walk to Chase, you can go open up a donor advised fund anywhere you want at a local community foundation even as well, but none of them will know the Muslim community foundation, the Muslim community like our community foundation does. We allow you to keep track of all of your zakat and your distributions. We vet all of the nonprofit organizations that you give to so that you don't have to run through their 990 reports or their annual fund reports. And you can rely on us to get that consolidated update for all of those organizations and bring that information to you. Some of the families, they want to know certain projects, so they talk to us about, you know, how can I build water wells in a different country? So we'll go and provide them quotes from all of the different charities in that country and bring it back to the donor. This white glove service, this philanthropic advisor service that we provide is unique to us. All of the other charities and all of the other donor advised funds on the market, again, they're not going to have the relationships with the community organizations that you know of and love. And the best part is we can still give to non-religious institutions. And that's one of the best points that we make is American Muslim Community Foundation is the one writing a check to your alma mater. And they'll understand that the Muslim community cares about them. We've been funding the Houston Food Bank, for example, for the last 3 years. And their CEO and their board chair acknowledged us and said it means so much to us to know that we have the support of the Muslim community. So it extends our goodwill and faith through our philanthropy and shows that we care about the community overall. So again, you can set up Sadaqah Jariyah projects, you can pass the balance on to a loved one, and you can name the donor advised fund on behalf of somebody as well so that they continue to get Sadaqah Jariyah for all of your contributions. So Always talked a lot about investing and appreciated assets, and many of you are probably on this call because you are in that boat as well. So by donating stock, you get that has appreciated for more than a year, you get a 20%, you get to save the capital gains tax when you donate it to a charity. So the charity will receive the funding of your stocks, and then the charity will liquidate those stocks after. So let's say you had held on to some stock and it grew over time, and obviously with the way the market has performed recently, you know, if it's still appreciated asset, it's still a great way to donate, and it frees up your money that you have in your bank and you can give through other means. So still appreciating, donating appreciated assets is a far more advantageous way for you to avoid a capital gains tax on that. And what it allows you to do is you get the fair market value of that deduction. You may have paid $50 for the stock 5 years ago, and now it's worth $250. You get the fair market value of that stock today when you make that donation. So it's far more advantageous for you to donate appreciated stock as well. And then you can take the money that you do have in your bank account and buy in that same stock again, so you reduce your future capital gains should you want to use it for yourself in the future. So I hope that was clear. I know sometimes that concept can be a little confusing, and we can clarify it a little bit better later as well. So what is a donor advised fund and how can you donate through it, right? So if you as a family typically give, you know, maybe $5,000 a year, the average American household gives about $3,000 a year, according to Giving USA, which is a research done by Indiana University. So, you know, you may be donating multiple times. You might have withdrawals going from your bank account or from your credit card, and it's hard for you to follow up with the organizations as well. So this is typically how a majority of people donate, but there's an easier solution, and that is a donor advised fund. So in this scenario, when you use a donor advised fund, you may be able to give more because you had appreciated assets, and you will avoid the capital gains tax, as we mentioned. You can still invest your balance over time to increase your charitable giving, right? You can't take that money back for yourself. All the money in a donor advised fund always has to go to a 501c3 nonprofit organization. And it gives you that one tax receipt again. And we, American Muslim Community Foundation, get to vet the charities, and we keep track of your zakat for you after you've calculated it. We will send a check to the charity of your choice and simplify that process altogether. The best part is we give a report to the nonprofit organization. You can request anonymity if you want to, but should you want the nonprofit to know the donation came from you, we will share that information in the organization's report. It'll say whether it's zakat, whether it's meant for a specific project, and that way the organization keeps better track of their donations coming in as well. I used to work at a nonprofit organization, so these were all the questions that we had, and it really simplifies the process for the nonprofit organization as well. So in order to open up a donor advised fund, you need a minimum of $2,500 to start your donor advised fund. We ask that you have a 5-year commitment to using your donor advised fund, and the minimum distribution to a charity from your DAF is $100. So if you'd like more information on setting up a donor advised fund, you can go to the URL on the screen, or you can text DAF to 71441, and it'll send you all of the next steps that you need to do. So we obviously charge a fee for service for a donor advised fund, and it's competitive with the market. Whether you go to Chase, Fidelity, or your local community foundation or organization that offers a donor advised fund, AMCF is competitive on the market, and we ask for $125 a year or 0.65%, whichever is greater, for the first $500,000 of your DAF. So what that breaks down to is essentially if your DAF balance is under $20,000, you'll pay about $125 a year in fees. If your balance is more than $20,000, that's when it switches to that 0.65% or more. All right, well, we got through it, and I will review the questions that have come in the chat feature, and we will go to it. So there's a question from Brother Hashim. Could Sister Amina run through basic stats concerning Muslims losing out due to lack of proper planning? Thanks. So Amina, take it away.
I'm not sure exactly what is meant by basic stats of Muslims losing out.
So I would assume that it's probably talking about like how many Muslims end up in probate versus not properly planning, right? So,
right. So we don't have enough statistics. We don't have any statistics yet, as far as I'm aware of how many Muslims end up in probate versus people of other faith traditions. But generally speaking, if you look at the statistics, the majority of Americans fail to have any plan in place, and out of those, a significant number end up going through the probate court process. Unfortunately, I just don't have any specific statistics that I can provide in that regard.
Okay, understandable. And hopefully, you know, the association that you're setting up might be able to look into those things, and places like Institute for Social Policy and Understanding might be able to do more research on that. So if these are things that you're interested in, we can actually fund it through your donor advised fund to work on those research projects. So the next question that I see is from Shafiq. And he says, I always thought that zakat on stocks was included in the 2.5% calculation. Is there fiqh that states the 10.3%? I just never heard of this and wanted to be able to learn more about it. Awais?
Yes, that's a very good question, and we thank you for that. So when we first started calculating zakat many years ago, people asked us to calculate zakat. So we said, well, how are we going to calculate it on 2.5%? That's something that you can easily do, and you can add in all of the other accounts that you have and do it yourself, right? It's quite easy to do. So we got the request to for the minority opinion, and I think it's most famously opined on by Sheikh Yusuf Qaradawi. And so we mentioned in one of the slides that it talks about productive land. And so, because if you really look at it, stocks and mutual funds are very, very different than cash and gold sitting somewhere. So the idea is based on the fact that this is productive money. You're actually employing people if you have a business. It doesn't mean that I necessarily ascribe to it because I go with the majority opinion. The reason why we calculate this one, again, is because this one is difficult to calculate. So if anyone is using this one, we offer that solution. So I hope that helps. If you can look up Sheikh Yusuf Qaradawi and look at his writings, it's in one of the books that he wrote as well.
Great. At this time, I think I see another chat. He said thank you. So Alexandra asks, can zakat only be made towards an expendable project, or can it go into a fund endowed by the organization? So I'll say that obviously there are a lot of interpretations on the rules. So I would suggest going to a scholar that you trust to ask for their advice. But it can go both ways, essentially. Awais, do you have any more specific information that you'd like to share?
Yeah, so I mean, I know about the majority opinion here, and maybe, like you said, somebody can go to a scholar for the other opinions, is that zakat versus sadaqah, right? So zakat needs to go out because people are in need, and the 7 different places that you need to give zakat are not going to wait for anyone to wait on their zakat. And if you put money into a building, I'll give you a quick example. So our local charity wanted to buy a building and wanted to use it for people in need. But we were informed by multiple scholars that that would not be the way to do it. Even though you're using it for the people, you need to let them have the ownership of the money. So if you put it into a building and then somehow they're going to use it in the future, that may not be giving them the ownership of the money. Having said that, I have seen writings that people say, we need to get more modern with zakat usage, because the amount of zakat that can come in can alleviate a lot of the issues for the long term as well.
Great. Thank you, Awais. The next question is from Shafiq again. He says, is there a list of Sharia compliant funds or stocks that we can invest in, either individually or through Amana or other investment firms? So of course, Awais, I'll let you say your part, and then
Sure.
We'll add some comments as well.
Sure. Yeah, there's only 3 or 4 funds or fund companies out there. Some of the fund companies have 1 fund or 2 funds. If you want to email me or call me, I'll be happy to give you more information about all of them. But I can speak for our company. Amana Mutual Funds now has 4 different funds, all run by Islamic principles. So you have a growth fund, an income fund, a developing world fund, and a sukuk fund, which is all sukuk, which is not invested in stocks, and that's called participation fund. You can, most of these funds that you buy from our company or others, if you already have a brokerage account somewhere, if you have a 401k at your employer and they offer a brokerage account as well, you have a Schwab account somewhere, you can buy the funds anywhere. Just another point.
Great. Thank you for clarifying on that. And, there are different apps, there are different investment companies. So even if you simply search Sharia compliant investments, you'll see all of them. The ones that I'm familiar with, I've heard of Zoya Financial. I think it's a platform that allows you to work with multiple ones. Then there's also Sharia portfolio. There's also Wahid Invest. There's also Azad Asset Management. So those are
and
the
Iman funds as well.
Yes, and the Iman funds. So those are the, I would say, the top industry leaders. But again, Saturna Capital has been around for 30 years. They have $4 billion of assets under management. So they're definitely here and partnering on this webinar. So would definitely encourage you to look into Amana as well. So let's see, is there, yep, that's the most recent comment. And I have placed both Amina and Oweiz's emails in the chat, so feel free to reach out to them if you have any additional questions. We will be sharing the webinar and some of the slides, since some of the information is proprietary information. You won't have access to all the slides, but the slides will show on the webinar itself. So we'll post that to YouTube later and make sure to share, again, everyone's contact information with you. And we would love to keep you engaged with AMCF. So you can text AMCF to 71441. And you'll be kept in the loop on all of the latest information that we have. And, you know, we're here to help you with all of your charitable planning from A to Z. If you want research done, if you want to vet certain charities, if you have a charity and you want to be listed in our nonprofit directory, there's so many ways that we can be of service to you overall. And we're really thankful for you taking the time to learn more about charitable planning and how to calculate your zakat and learning more about estate planning. So any final thoughts that you want to share, Amina?
No, I'm good. I'll keep it short.
Wonderful.
Thank you for having me, and Ramadan Mubarak, everybody.
Awesome. Thank you. Awais?
Yeah, thank you for everyone for joining today. And like Muhi mentioned a few times, we'd be happy to answer any more questions or provide resources. So reach out, we'd be happy to do that. Thank you.
Fantastic. Thank you, everyone. Take care.
Assalamu alaikum.
Wa alaikum assalam. And early Ramadan Mubarak.